Now, the election results, of course, has also brought forward a whole set of views, right? And the street is watching all of this closely. A lot of foreign brokerages written, local brokerages are weighing in about what they think the road ahead could be like. You heard from Neelkant from Axis, but there's more. Sonal is here with that compilation. Sonal, morning.
Good morning. Thank you so much for that. Well, there are some diverse views, so let's get started now. Let's start with Jeffries first up, where they say it was unexpected that there will not be full majority coming in from the BJP, but their base case is that it will be a coalition government led by Mr. Modi. However, they say they continue to believe in housing-led capex upcycle, but the stock market will demand a proof again. On the back of this, they think that large cap laggards, they will offer the best risk reward. Going forward, they are overweight on private banks, there's consumer staples and auto OEMs as well. But they have cut their overweights on real estate. They were a big bull there on industrials and PSUs as well. Moving on to CLSA, now they have moved from having a lot of conviction to having doubt right now. They've replaced L&T in their India-focused portfolio with HCL Tech on the back of this result. Private banks, IT, insurance and commodities are the preferred sectors for CLSA. And exposure to Modi stocks, which are ONGC and Reliance, is limited according to them. But they fear a derating in expensive discretionary and capex space and also prefer valuation support in some of the private banks. UBS says that after weak outcome, something that was not expected, now investors will focus on government formation and the choice of Prime Minister, considering that the BJP does not have full majority now. Also policy choices to support growth now, vis-a-vis ensuring macro stability and reform narrative going forward. But they remain underweight on India in terms of emerging market context. Morgan Stanley says that BJP is falling short of majority, but their base case is BJP-led NDA is likely to form the next government. And that's why they say that their medium to long-term views do not change so much. With the pace direction of reform, slower change is the next big question, but they think that this is unlikely. They also say the focus will be on macro stability that has informed government policy. Will that change or not will be the next debate to watch out for. Bernstein says that they believe that the continuity of power is a powerful enough narrative to support the economy, so they are also not so worried. They retain their view of high single-digit returns, and also Nifty target is unchanged at 23,500. They do not see an immediate material impact. They remain underweight on small and mid caps, but they remain overweight on financials as they were earlier. HDFC says that negative electoral results would lead to valuation correction, and that is something that they're worried about. They remain positive on financials. They expect industrials and select PSUs to witness a contraction of multiples, something that a lot of other brokerages have also indicated. Emkay says they see Mr. Narendra Modi returning as the PM, but the circumstances will be quite different. They have switched from PSUs and capital goods to FMCG, and they see buy Indian equities if Nifty falls below the 20,000 mark. They go overweight on FMCG, IT, healthcare at the cost of industrials now, and have also cut the Nifty target to 22,000 versus 24,000 earlier. Goldman Sachs, however, they remain overweight on India, but they favor domestic sectors and raise staples on likely rural support going forward.
Okay, all right, got that. Thank you very much. So that's a lot of different global views that are coming in, fairly mixed, but I think barring UBS is a big bet and they have been bearish in the market. They've been underweight for a while. A lot of others are saying that maybe money will come in, maybe we'll see a bit of sector rotation, maybe limit, like CLSA is saying, limiting some exposure to the so-called Modi stocks. But largely, perhaps this will be a dip that investors would want to buy into. That's the sense on the street.